Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. We're seeing the dollar index fall back today on the heels of yesterday's manufacturing, the second contraction in a row and the worst since 2009. Ultimately, though, the dollar's been trending higher on the year. We've seen these new highs, falls back, but the trend is higher. There's a trend line now coming in about 98.15. Tomorrow we're looking at ISM non-manufacturing as well as factory orders, but this is what you want to keep an eye on is that trend line heading into non-farm payroll on Friday. The euro has a very similar trend line as it's the bulk of the dollar index, just below 111, about 110.85. So any move higher in the euro and any move lower in the dollar index, that's what you want to target. You have services and composite PMIs coming out of the eurozone through early in the morning, and then leading into that services number from the U.S. So keep an eye on all of that. One thing that's actually been very constructive in the currency side is the yen. The yen double bottom, following all the safe havens higher. You've seen gold roar higher here. You've seen the treasuries as well move higher. But the yen, a bit of a double bottom, moving very constructively up. 94.05, that's where you have about the 50-day moving average. You have a retracement just above there, 94.25. So let's call this pocket 94.25, major three-star resistance. Move above there is very bullish to the yen. So got a resistance coming into there, move out above there is a breakout in essence. So keep an eye on that. Very constructive overall bottom, and that could in and of itself give you the tailwind. Keep an eye if the equity market continues to fall over. Strong support in the S&P 2890. That would also lift the yen, but now we got the weaker dollar and a weaker equity market. It's a perfect landscape for the yen. And then looking at the Aussie dollar, the RBA cut rates early yesterday. That sold the Aussie dollar down and found what is becoming a quadruple bottom low. We retested that today, and we're moving off of it again. So a lot of this, though, is the weaker U.S. dollar. Some of the Aussie dollar basically digesting the RBA move already as it was expected, but it's certainly not the weaker equity market. Metals in some of the commodities outside of the energies, but the metals complex has moved up very well today, and that's been somewhat supportive to the Aussie dollar. So you're seeing just oversold conditions and oversold sentiment. Some of the metals all helping the Aussie dollar lift up a bit. It's certainly not the equities, but the equities and energies are weighing on the Canadian dollar. 75 has been a floor. We break and close below there. You can see it continued selling. The Canadian dollar just cannot get out above and hold out above 75, 80, 76. That's been the headwind for it. Now, a lot of this throughout the week is going to be very dependent on what the U.S. dollar does. So keep an eye on that heading in tomorrow's data, and then obviously non-farm payroll Friday. We are here to help. Don't hesitate. Give us a call, 312-278-0500. You can email us, info@bluelinefutures.com. Check our website for updates. And remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.